is up, Zinger Nation? Welcome back to another episode of Benzinga Live. Happy Tuesday, everybody. What is up, Zinger Nation? Welcome back. Happy Tuesday, and more importantly, happy Halloween. Welcome back to another episode of Benzinga and Kaiju's educational series. I'm your host, Aaron Bry. I'm going to be joined with our special guest of honor, Ryan Pannell from Kaiju. In a moment. Last week, if you weren't with us last Tuesday, we spoke about different educational materials, different resources that you can access as you're either starting out your trading journey or maybe trying to progress to that next level. And this week, we will be talking about brokerages. So, without further ado, I'm going to go ahead and welcome my man, Ryan Pannell, on the stream. Ryan, how are you doing today?
I'm good, Aaron. How you doing?
I'm good. As you can see right now, I'm without a Halloween costume. But don't you worry. Tonight, as I'm passing out candy to the youngins of my neighborhood, I will be dressed in a very, very intricate Jack Sparrow costume.
Really? You got to post pictures of that.
Okay.
Bring that next time. Show us. Hold it up.
I don't know if I'm going to want to put the makeup and everything on for the show, but maybe we'll see. I could be maybe talked into it.
I'm going to remain in this shirt.
All right, there you go. I like it. It's a good shirt on you. All right. Well, Ryan, before we get into brokerages today, I was thinking for maybe some folks who weren't here with us last week, why don't we just do a very, very quick, brief recap of what we talked about last week?
Sure. We talked about educational materials, where you can find everything from free education on learning how to trade options and some stocks to some more formalized courses with like capable, reliable professors. Let's call them that, right? What you want to avoid, we talked about, is learning from some guru that has a trading system to sell you along with the education. I can guarantee that the education that you get will be on how best to serve that person's needs, not so much your own. And it's a very slippery slope there. You're looking for somebody that has been a floor trader, who has been a market maker, who is a chartered market technician, somebody who's been in this for a while and knows what they're talking about. And you're looking for somebody that's not selling you a system. That's the biggest red flag for me. Like, you should be able to learn how to trade without learning how to trade a system. There are some fundamental rules, work for everybody. So we covered that off. We shared some resources, shared some books. If you're a reader, you want to read a little bit, we've got some books. I had no podcast at all to offer because I don't listen to them. That's my bad. This one. Is this a podcast? All right, this one.
Podcast, show, whatever you want to call it.
Yeah.
Well, yeah, I mean, and last week, again, I mean, we had a lot of great, resources that we talked about. So if you guys are interested and you kind of want to start there, I do think that's a great place to start. You can always go back and watch last week's episode, but let's get into this week's episode. Let's get into episode 2, Ryan. We're going to be talking about brokerages today. So I think this is the natural next step, right? If you learn a little bit about how trading works, okay, now you have a better understanding of buying and selling stocks. Maybe you have a better understanding of options after checking out some of these resources. Now you're probably wondering, okay, well, where do I actually do this? Where do I actually get going? I've had my own different kind of journey through different brokerages. I'm happy to talk about mine at some point, Ryan, if you'd like me to, but in your opinion, is this a one size all type thing, you think, or what goes into this?
Yeah, definitely not one size fits all. I mean, there are absolutely different brokers that are more and less useful from a capital-based perspective and from a trading instrument perspective. And what you're trying to do is find the sweet spot of which broker can meet all of your needs for the least amount of money and offer you the tools that are most useful to be able to achieve positive outcomes in your trading style. That's the end goal, right? I mean, it doesn't help if they offer all sorts of fancy additional tools that you will never use. It doesn't help if the minimum requirement is so high a capital base that you have trouble even meeting it. let alone sustaining it. And it doesn't help if they gouge you for fees, or if in terms of order flow, you're treated so badly in exchange for no fees that you're really not getting realistic executions at the end of the day. And therefore you think you're not a profitable trader when really you might be, and you just have a crappy broker. So that's what it boils down to.
Got it. Well, Ryan, I should have taken a step back, and I guess for maybe some people out there who might be beginners, like, what is a brokerage account and why does it matter, right? Like, what if you can buy and sell stocks somewhere? Why would it matter for one place versus the other?
Well, so what is a broker? The brokerage account is where you go to buy and sell stocks, Aaron. So you will need that if you want to move forward in this discipline.
You're telling me I can't just walk up to the New
I'm
York Stock
sorry.
Exchange and start buying stocks?
I mean, you could try. They'll
Okay.
arrest you. If you've
Okay.
ever gone to NYSE, there's like a 3-point security checkpoint outside, inside, little swipe card turnstiles. Yeah, it's not going to work out. So at as most basic, right? When people start out and they just want to start trading, the first brokerage account you're probably going to have access to, if you bank with a large bank, Bank of America, TD, Royal Scotia, RBC, etc. All of those banks have brokerage services. And opening a brokerage account is a relatively simple process for you because you already have the bank account. So moving funds from your bank account to the brokerage account and back to your bank account is going to be like a 1 day or half day kind of thing. Super streamlined and very easy to open because they already have all your information. So you're going to sign some disclaimers. You're going to accept, additional fees for real-time data services if you need those, and you'll be off to the races very quickly. So what's the downside of that? With few exceptions, their tools are the bottom of the barrel. You will have access to probably no routing choices. Like you'll just send them quote unquote to the floor, which means that your broker is just going to fill them themselves internally. Your trades will never see the light of day. You probably have market or limit orders. And that's it. You will be limited in terms of complex orders you can create. So bracket order, which is a buy stop limit order, is not something you're going to be able to create. No dynamic or elastic trailing stops for you, etc. So if you are a position trader, and by definition, that means you're looking 3 to 6 months out, you generally are buy and hold. You do not short-term trade. You make few portfolio adjustments and rebalances. You look at your portfolio on Sundays or every couple of weeks. There's nothing wrong with those brokerage accounts. The commissions will probably be high, but because you don't trade very often and you're leaving these trades on for higher returns over time, it's really not going to beat you up too much. So it's not a bad place to start. And then from there, it kind of just explodes, right? Like you suddenly go from that to too many choices. Some of those are going to be limited by the capital allocation that they will accept. So Interactive Brokers, I think, is like 15 grand. That's how much you have to open an account with. So if you've got $5,000, that won't be an option for you. Other brokers have higher limits. Once you get into the institutional and professional brokers, you're in the millions of dollars or tens of millions or higher. But I'm curious, Aaron, where did you start?
So I started, like I'm sure a lot of people did, on Robinhood, and I downloaded Robinhood, I want to say in 2019, toward the end of the year. So just a few months before the COVID crash, March 2020, I opened my Robinhood account, which I think it was just out of like ease. Like it was just like, oh, this one's easy to download. Like I'll go ahead and do this. And I think we've talked about this before, Ryan, but like if you're okay with knowing you're not going to get the best fill, then Robinhood might be okay for you. But if you're someone that is going to be day trading in and out of things and this and that, then like maybe you want a little bit more of a sophisticated brokerage. Would you say that's would you agree with that?
100%. I mean, I give from my side of the business, Robinhood gets a ton of hate. I mean, it really does. And I think that's not deserved. On the one hand, I thought their introduction of fractional trading was awesome. honestly. I mean, most beginning traders don't understand odd lot order flow and how they're treated by the market. So minimum order size is 100 shares. And as long as you're trading a minimum of 100 shares, then you are legally required to be filled by your broker within the NBBO, the National Best Bid Order. That is somewhere in between the bid and the offer, the bid and the ask. And you can't just be filled outside of that. But as soon as you are under 100 shares, you are an odd lot. And odd lots get stuffed off to the side and they sit there waiting for other odd lots until a whole lot, a minimum of 100 shares, goes out and is printed. And so you are not guaranteed the MBBO if that's the case. And that extends right down to your fractional share trading. But like you said, Aaron, if you don't really care whether you print 2 or 3 or 5 cents higher than the MBBO that's striking at the moment, then the commission-free trading might work for you. And the fact that you can buy $20 of Amazon or $20 of Tesla instead of the share price times 100, which most people just can't trade to be treated fairly by the market, maybe that's not a big concern for you. It's the most important thing is just to know that that's what happens, right? You know that we all know that Facebook or Instagram or whatever, they're not really free, right? I mean, we're the product. We're providing behavioral data that's being sold to somebody else, another entity. And Facebook or whoever is training their systems on our responses. So we get that. There's a contract there, right?
Right.
So for Robinhood, hey, it's free trading, it's commission. Yeah, nothing free. I'll tell you, brokers are not doing it for free. So your order flow is being sold to market makers, and you run the risk of poor executions because of that. If you don't care, I'm all for it.
Yeah, and I think that's why this conversation that we're having right now is important, Ryan, is because when you're looking at different brokerages, everyone's going to be slightly different. There's going to be pros and cons of each one. Obviously, Robinhood's not going to come out and say, hey, yeah, your order's not going to be as good here, right? They're going to try to promote the good parts about Robinhood and maybe not some of the drawbacks. So it's important to have this kind of conversation, realize what some of those drawbacks are. Because certainly I didn't know all that when I made my account at Robinhood. I'm not even saying that it necessarily would have deterred me from making my account at Robinhood, but I certainly didn't know it when I did. And so, again, I just think it's important to kind of talk about some of these things that the companies themselves are not going to advertise.
It's not a guarantee, right? It's not a guarantee. It's not like if you're trading at Robinhood, you are not guaranteed the worst possible execution. It might not be a very good execution. You might get executed right smack dab at the midpoint. It's possible. Their business model depends on selling order flow, and they get paid the most for order flow. They are the big daddy of selling order flow out to market makers. So as long as you know that, I mean, all brokers, like the commissions that they charge on both sides of the trade, where their fall off points are, like this is a symbiotic relationship, but it's not one way, right? Like the broker's just not there to get run over so that you can have a great experience trading, right? It's not how the deal works. And you're not there just to constantly pay through the nose to the broker. So you're working together. There's always certainly we use multiple brokers with Kaiju, and there's always a good, healthy working relationship, but you understand that you are both trying to make money here. And sometimes that goal is incongruous. One of you is going to make some money and the other one's not going to make money. And I will give you 3 guesses which one always wins, but you will only need one guess.
The market, right?
The broker. The broker wins.
House always wins.
House always wins.
Yeah, I mean, and so, and like you said, I mean, the fills might be. It's not always going to be the worst fill on Robinhood. I without looking at the data, I'd probably guess that if you compared Robinhood to other brokerages that we may talk about later in this segment, that Robinhood's probably aren't as good on average, which is just what we're looking at right now. With that said, Ryan, are there any non-negotiables, must-haves when it comes to a broker? Like if you were looking to open a new account today, what would be the top things that you were looking for in a broker that if it didn't have it, you'd say, okay, on to the next one. I don't want you.
Well, I mean, I think the only thing that would be a hard no would be that if you use FINRA's broker check and they have like the worst possible rating, I would steer clear of that broker. But other than that, it really depends on how you trade, right? So if you are trading both sides of the market, let's say when I was starting out, I was equities primarily, and I was long short. And I shorted a lot. So deep inventory of good borrows was really important to me. That was high on the list. And what I mean by deep inventories is that you do not want those shorts called back early because they didn't have a deep bench to loan you. Like you borrowed their whole 8,000 stockpile of that stock. And so you're sitting there, you're happily waiting for the short to break through, second leg down, and you get a call back before the end of the day that you got to close your short position and return those shares. And you're like, well, what the hell? Especially if you're paying a hard to borrow interest rate, right? Like if you're paying something, and some short hard to borrow rates are ridiculous, 188% per year. Okay, so like if I'm down 0.75%, or plus 0.75% on my short, and I'm looking to close out at 1.5, and I've had it on for 4 days, and you call my short back, the interest might eat all of the profit that I just made, and my winning short is now a losing trade because you needed your inventory back. Now, part of that responsibility falls to me. If you are shorting some, habitually hard to borrow or something that it took you 2 days to find inventory on, buyer beware. But you get Facebook called back and it's like, come on, like you don't have that sitting on a shelf somewhere. So that's important. If you are an algorithmic trader and they've got like the world's crappiest algorithmic tools, like you can't build an ActDisk algo like you can with interactive brokers. Don't use that broker. Like they need to have what you need to make money, and they need to have competitive rates that make it possible for you to do so. You're like 50 cents an options trade and you're trading dollar contracts. That's terrible. So, you need to shop around a little bit. So that's all I can say is that the deal breaker is, do they have or not have what you need?
There you go. And what is competitive rate? You said 50 cents for an options trade. I mean, is that kind of the
Depends on
going
what you
standard?
trade, right?
Okay.
Like you got two ways to go, and there'll be the flat rate. Well, so there'll be commissions free. You got Robinhood and you got other vendors that do like no commissions. You will still pay exchange fees, right? Like the fees are non-negotiable. So in terms of whether you're making or taking liquidity, those pennies are going to get added onto the cost of your trade. This is why, like when you trade, when you supply liquidity to the market, you're selling options. You're gonna trade fee free on that. There'll be a fee rebate. There's fee rebate on iron condors because even though they're completely offset, the market considers them making and not taking. So you get an extra 2 cents or something like that from the market for selling an iron condor. Okay,
Hey,
cool.
thanks, Mr. Market.
Exactly, right? Like, and you can look through, and this is like if you're wondering, you're in your trade execution system, you've got these routes, and you're routing SIBO or ARCA or whatever, or NASDAQ or BATS or PHLX or whatever it is. What the hell are we selecting these things for? Because the type of trade has a rebate program at that market that's advantageous to us. Also, maybe because it's the axe on that particular day, but we'll get into that in another episode. But ultimately, like it depends. So you got commissions free, and then you've got like the sort of block fee, $100, or no, sorry, not $100, like $1 per stock trade or something, or you have a cent, a tenth of a cent, 10 cents per share. So it depends what type of trading you do. If you do high volume shares, you're looking for the lowest possible per share trading cost. If you're just doing buy and hold, then that provided by your bank, which might be 75 cents per options trade, maybe it's 50 cents or 25 cents for a stock trade. might be acceptable if you're trading $100. But again, please don't scalp pennies intraday, because these are the things that will eat away your profits. But it's hard to say what's the ideal rate. This is something we negotiate with the broker like constantly. Come on, man, help us out. Well, we'll give you a better margin rate. How about that? And at the end of the day, if it comes out better in the wash, you take the deal. And that's something we can add on when we're talking about margin.
Yeah. And so we've discussed so far, Ryan, just to recap, kind of what you're looking for in brokerages, what competitive pricing looks like, and all these things. What about tools and functionality? I mean, again, like when I started with Robinhood, that was obviously one of the big draws, which is functionality. And it's like a nice, clean app, easy to use. What are your thoughts about, different tools and functionalities?
Yeah. I mean, in terms of functionality, I would say that if you really want to, make a go of this at a bare minimum, you need to have sort of the primary order types, which is, you need buy orders, which are market orders. You need to have a limit order, which you are never going to use by yourself, please. And you need to be able to set up two-step orders, like buy stop limit orders, right? Which is just so we understand what that is. It forces the price to move in the direction of your trade. So if you think that a stock is going to go up, you set a buy stop above the current stock price with a limit above that. So you want the stock to prove you right first. It has to move into your buy order, but then there's a maximum that you're willing to pay for it. So if it blows through it, you don't want it at any price. You want it somewhere in between here. If it moves up and it rolls over and dies off before it hits your buy stop, then your buy stop limit order just saved you from a loss. So that's why we use them to enter stock. On the way out, stop loss is just a market order, right? When it hits this threshold, you are done. You want out. There is no limit on that. If they have the ability to dynamically trail a stop, so you've won, but the stock is still moving up, and you don't want to just tap out, but you also don't want to miss as much of the extra cherry on top as you can, you're going to have a trailing stop with an offset of a nickel or 25 cents or 5% or whatever it is based on how the size of your trade. And you're going to let it trail up until the price retraces, and then you're done there. So that's really helpful to have those tools. And I guess, as you get more advanced, you want some portfolio risk management tools. IB actually has really good portfolio risk management tools that will show you shocks on your portfolio at different market hits, which is it's useful for you to see. You might be thinking, gee, I wonder what theoretically would happen to my positions if the S&P took a dive 5% in the next week. You can model that and then look at what would happen and see where your risk is. That's helpful. And obviously something like Tastyworks for options, that was designed from the ground up by a bunch of options floor traders. So they have visualization tools, cool metrics like probability of touch, probability of profit. You can see your inversion ratio. Like there's lots of cool things in that. So I wouldn't buy into something because it had flashy things that weren't necessarily useful. I'd make sure that I had the tools to be able to do what I needed to do as professionally as I could do them.
Got it. Well, there you have it. And so Ryan, we just talked about, what type of good tools and functionalities do you like to see on brokerages? On the other side of the spectrum, what are some red flags, potential scams, or anything like that people should look out for or avoid?
Brokers that are specifically advocated by like the same gurus that I mentioned, like at the beginning of the show, right? Like anybody who says, I saw this scam, like, when was this? This was a long time ago. I feel like it's like 8 years ago, closer to 10. There was this guru. I'm not going to say his name. I don't even know if he's still out there, but he was pumping this quote unquote, my high net worth broker. Asked me for an introduction to my high net worth broker. Was this little crappy shop in the Bahamas. This guy actually turned out to be like an owner through a shell company that he didn't even hide very well. So he was sending people to a broker that he owned. Big red flag if the broker lets you fund the account with your credit card. Please don't fund your brokerage account with your credit card. If you have to borrow money to open a broker account and trade, don't trade. Just paper trade. Read books, do the courses, learn, mess around, use Excel. I don't know. You shouldn't be trading if you do that. So those are red flags. Broker check, obviously. And I will just say about broker check, look, running a broker dealer is a hard gig. It really is. I wouldn't do it. I've never wanted to do it. It's a rough go. You're making money, scalping pennies all over the place. You're under an enormous amount of really punitive regulation, and it's very hard not to make a mistake. So almost every broker that you look up is going to have one or two dings from broker check. Read what they are. You can see that they were fined for this or that thing. You determine, as long as it's not fraudulent, fine. And you don't want to see like 8 to 15 complaints lodged with broker check. But outside of that, I don't think there's a huge red flag. Really high commission rates, but those are kind of gone the way of the dodo. I'm not seeing a lot of those anymore on the retail side. It's super competitive now, which is great.
Yeah, I think it's like the thing with the fractional shares is that once you have one brokerage come out and offer it, kind of all the other ones need to go match. And so I think it was it TD that first did commission-free trading back in the day? Or
no,
Robinhood too, actually.
Yeah, it was actually, there was like reduced commissions trading, but Robinhood was really the one that did fractional and commissions free. Like, just came out the gate and was like, this is what we're going to do. Back in the day, it was a little darker in that they still sold order flow, but charged you commissions on top.
The double whammy.
It was the double whammy back then. It was like, hey, how much money can we get out of you, commodity? So
there you go.
Dark times.
Well, all right, that's good to know about the red flags. What about you, Ryan? I mean, you asked me where I started. I told you kind of about my journey through Robinhood, and now I've gotten on to some other places as well. But where did you start, and where are you now?
I started with the brokerage account that came with my bank account when I was young. And yeah, it was total garbage. It just had like, I don't even think it had limit orders. It was just like a market order was all you could do. And it was like the world's crummiest fills. And they would sit with a market order like on deck forever. I remember it was just terrible. That was back in the day that was before TD owned Thinkorswim. So that's really dating myself. Long time ago. When I started doing this professionally, I quickly moved to Interactive Brokers because they had the tools that I wanted. And specifically, IB does have very, very good borrows, and I shorted a lot. So I needed that. I needed that inventory, and they were great for options. Their mix of Trader Workstation Classic and Mosaic, which is like these two views of the same software that they have, is sort of novel. Lets you do two different things fundamentally, which is pretty cool. And I was there, I think, up until like small hedge fund size, 5 million, somewhere in that neighborhood. But once you get there, it like those types of brokers just stop functioning. Like the rates can't be competitive anymore. And you move. We went to Dash, and then Ion, Merrill, and ABN AMRO. And the broker you end up using at the end of the day, like there really is no offense, brokers that we use. None of them are watching this, but there's no winner. There's a winner for a specific type of thing. ABN AMRO for volatility arbitrage is fantastic. Dash was actually pretty decent for flat options. Ion, not bad. We worked with their floor guys a lot. They were a good group of guys in New York. And Merrill for equities has always been, nearest and dearest for me because, they got the tools that I need, and you have the capability of a build out, which, when you get up to.
I actually have a Merrill account now as well because I have a Bank of America account for just my normal bank account, not Bank of Account, Bank of America account. I have a Bank of America account which is merged with Merrill. I think Bank of America bought Merrill Lynch or. Right.
Yeah, BAML is what we call it now. Just
BAML. Yeah, and so it's easy, right? I have like the same app for my checking account that's also has a brokerage, and it's easy to set up like a Roth IRA in there. So, I mean, it does seem like, Ryan, that as long as you're going with kind of one of these more established upper echelon type of brokerages, a lot are going to have similar offerings and pricing and stuff because, like you said, it's such a competitive landscape. I think really what it gets down to is depending on like how advanced you are, or what your goals are, what you're going to be trying to do. And like if you're actively day trading, I think for a lot of retail investors, maybe Interactive Brokers is a little bit better than Merrill. But if you're not, then maybe Merrill's a little bit better than Interactive Brokers because it's not, you don't need all that and there's not as much noise on there. So I think at a certain point, it's just all the viewers out there, you guys got to figure out, hey, what am I looking for? Am I looking for a brokerage that's professional and has all these different offerings, or am I
Yeah, and
looking for
what are they going to give you at the different thresholds, right? Like if you're under the pattern day trader, it's going to be tough, right? Anything under 25K is going to be tough for you because you're limited to these 5 round trip trades per week. As soon as you're over that, the next level that you're looking to tick through is from Reg T to portfolio margin, right? Your money's going to go way, way further once you click over that. Some places that's 100K, some it's 150K, some it's 125K. And then some of the places like, again, IB, once you're over $1 million, now you've got like the floor access directly. So you have a phone number you can call up Shandor, and you can be like, I'm going to do this, fill or kill, market on close. And he's like, okay, good, got it. I'll call you back with confirm, and he'll bugger off and go do that. Like if you don't need that, then who cares? But if that becomes part of your business as you grow, then it's meaningful. And some of the brokers don't have that at all at any level. Some have a portfolio margin requirement that's way higher. So that's going to make your money go not as far for much, much longer for no reason. So it's really important. Like as you grow, the broker's got to grow with you, and you shouldn't feel bad about moving brokers. We do it. I wouldn't say we do it all the time, but we do it when the business case calls for it, for sure.
Yeah. And I mean, Ryan, I love, these conversations are great. And we're talking to the like professional trader, Ryan Pannell, today. But you're also, my go-to AI expert. And I'm curious right now, have you noticed any brokerages starting to use, that's a silly question because I'm sure every single brokerage is now trying to implement AI in some way. But have you seen any like consumer-facing tools from brokerages recently that are AI powered? Anything sticking out to you?
Not yet. No.
Okay.
There are consumer facing tools that claim an AI flavor behind the scenes, and you run through like their spec sheet, and 2 seconds it's like, yeah, there's no AI here. This is like they've just called it AI. There's a quantitative process that runs behind the scenes, and it has a variable offset. And so it's going to give the illusion that there's a decision-making engine, but it's not really there. No, the brokers that are using AI, and they're all using AI right now, but they're using it more to manage order flow. It's a huge part of the business. It's not one that's going to touch the average trader generally, but like on our side, like flows are really, really big business. Like they can make or break a strategy based on whether or not you can execute the strategy efficiently. And pennies here can sink you. Cost of trading can sink you. And so AI on the market maker side, like GTS is for sure using an AI system now. They were our lead market maker when we brought DIP out first on ARCA. Citadel, obviously, on the equity side is a heavy user of AI, and they're using it as well for flow management, right? And not just, I use the term flow predation all the time. It's not just flow predation. It's just efficiency. Like liquidity pockets and voids are not good for anybody. They're maybe good for Citadel and the HFT business because they just crash through it like a freight train, and you pay the price for that. But for the rest of us, it's crap. So if flows can be optimized so that those pockets and voids are filled with buyers and sellers, it's better for all of us. So that's where you're seeing it right now. Really.
Yeah, and it's only a matter of time, right, Ryan, before we start seeing
For sure.
different type of consumer facing tool. I'm kind of, I don't know. It seems, I wonder, there will have to be some sort of I know Biden just passed an executive order yesterday. I don't know if have
Do you
had a
notice that
chance?
it left out like finance entirely? Like it was not one of the business
Well,
sectors.
that's what I was
covered?
just thinking about, is because I was like, I'm sure there'll be some regulation to stop AI tools from saying, like, because if I go out right now and try to buy Apple on my brokerage and some little AI thing pops up and says like, well, actually, a lot of institutional investors are selling Apple right now, and current trend, yada yada. Like, there's no way that that shouldn't be legal. I don't think, if that's is what.
Well, it's covered actually, and that's why you're not really seeing it on the like consumer brokerage side, is because if you get the question that they're asking, that everyone's asking, is if you get feedback from an AI tool supplied by your broker, did it just give you advice? Like, did it affect your trading decision?
Right.
I'm a huge believer in that type of tool. You should be able to plug in your intentions and have an AI powered look back, which is, let's face it, going to be mostly quantitative for that type of work, but something that is taking into account broad market conditions, the current underlying conditions, like volume weight at price. And it comes back and goes, yeah, you can go do this, but I will tell you that this has only worked once in the last 45 times in this stock's entire lifetime that it looked like this. Now, if you don't make that trade, if you go, whoa, thanks, AI, I'm totally not going to do that now, and then the stock runs off and it's like, oh, sorry, 2 out of 45 times, you're going to be super pissed, right?
Yeah.
And if does it just tell you not to do that? What happened? What about a holistic portfolio management tool that says, hey, you're leaking a bit here on technology. Here's a holistic hedge that you could use. And what happens if there's an energy route and your portfolio eats it and that hedge eats it anyway? Are you going to call the broker and be like, your stupid tool gave me this hedge that totally didn't work? I think that's why these things are currently not popping up. But you can mark my words, AI robo-advisors, that's what I am it's going to happen. I really hope it doesn't, because they won't really, they can't possibly work well for you because your needs are just too dynamic for something like that. But that's what's coming. That's what's coming.
Yeah, I mean, it's fascinating. I mean, like, if I'm thinking about it, if there were not even connected to a brokerage, but just some AI powered, something that gave advice, like you said, like an advisor, but it was really good, and it got a track record, and then more and more people started using it, then it would seem, it's like, okay, we like Apple right now, here's why, and then all of a sudden 1 million people are using it, and they're all going about, it seems like, okay, then the AI platform could then start influencing markets in that way. So it is interesting that finance was kind of left off that executive order yesterday. I mean, I'm sure we'll get some time to talk about it more in the future, but I mean, we just gotta keep our fingers on the pulse, Ryan, and see where this goes, because right now it's kind of up in the air, it seems like. I mean, you know more than I do.
Yeah, I mean, I'm living this every day, right? I mean, but if there was like how you're saying, there was this system, this AI system, and it could build a reliably profitable portfolio. I'm like, that's literally what all of us in this space do. And we spend tens of millions of dollars building these things. It's like, and if
come on, it's easy. You just plug in some numbers, right?
We release this wide, it would be useless in like 5 weeks, right? 5 weeks, those patterns would all be gone. Like, there's a reason that it's secretive.
Okay, I see.
We do, right? Like, I mean, if we predate on like large funds buying and selling by identifying their buying and selling patterns, you're going to be able to do the same thing to us if we got large enough for you to identify our buying and selling patterns. So it's sort of a self-terminating kind of property. I mean, what we try to do with DIP, and what any ETF creator tries to do, is some flavor of that, where your participation is not going to disrupt the patterns, right? Like, after we've printed the portfolio rebalance daily, it creates the pattern, but we've already eaten it. We've already bought and sold. So what you do after that isn't going to substantially affect the outcome at that point, if you could find us in the first place. And let's face it, we're a bit small for that on the ETF side. So, I think that's what you're going to come. I hope you're going to come close to that. I hope there are other more AI ETFs, not just us, and Craft, et cetera.
Yeah, there you go. Well, Ryan, this has been a great conversation. We've talked a lot about brokerages. I want to go ahead and pull up our slide here that we have that's kind of recapping everything, our beautiful Kaiju kicker. So without further ado, let's go ahead and get that pulled up. All righty. So we're gonna recap real quick. End of class pop quiz, y'all. Check in. Do find a broker whose capabilities match your trading style requirements. So if you're like me, or if you were like me when I first started trading, and you don't need the most sophisticated thing, maybe you do download Robinhood or an app like that just to try it out, see if it's for you. And if you're still trading 6 months, a year from then maybe you take the next step. Or if you know that you already want something more sophisticated, then maybe you skip that initial kind of beginner step. Ryan, you want to take the next one?
Yeah, sure. Do not open with a high net worth broker you've never heard of just because some guru told you to. They're going to rope you in with the whole term high net worth broker. You're going to like execute trades by using some instant messenger service. You're going to feel awesome because you're talking to a quote unquote guy, and you're probably going to get tremendously terrible fills. And that broker's probably in an offshore jurisdiction. And when it collapses, you'll have no recourse to recover your money. So please don't do that. And finally, don't forget to check the broker out at FINRA's Broker Check. It's a free service, and it's such a huge part of your trading business and trading future. Just look it up. But again, take the time to go one level down if you see a couple of dings and just read the dings, because some of them are like a crazy person filed a complaint with the FINRA saying that this, the fact that they lost on their Tesla play was the fault of the broker, and the broker was cleared. So it still appears as a lodged complaint, but you're going to read that and go, yeah, okay, that's ridiculous. So I'm fine with that. So take the time to do that. It'll be well worth it.
Well, there you go. And then also, make sure to tune in next week. We'll be back. Do we have a topic set aside? And also, guys, in the chat, if there's anything that you guys want us to discuss next week, things you're curious about AI, always make sure to drop them in the chat, because we are very receptive to feedback here. We hope that this educational series we're doing with Kaiju has been informative for you guys so far. Look, even for myself, I've been learning things from Ryan here. And so thank you again, Ryan, for coming on and sharing all of these, just insights from where you get the inside baseball, the kind of behind the scene, pull the curtain back, if you will.
Yeah, I can share everything from the bad beats to the there to here, right? I mean, if I can make that trip shorter for anybody, and you can learn from my pain, by all means.
Please
do.
When we will. Okay, so next week we will be talking about just how to set up a trading platform, the basics of how to identify trade opportunities, manage orders correctly, identify risk, and view your portfolio holistically. So we're kind of making this, this is a very natural progression. We start with educational resources. Today we talked about brokerages. Next week we're going to talk about what you actually do on those brokerages. Whether establishing some strategy, kind of looking at past trades and seeing what worked and what didn't work. So, Ryan, as always, I'm excited next week to learn some more from a professional, institutional investor like yourself.
There you go. We'll share some screens. We'll do a little TC2000. We'll do a little Bloomberg. And whatever it is you use, there's some flavor of what we'll be sharing that you'll be able to apply to your own trading tools and how we can get you started.
Beautiful. All right, Ryan. Well, thanks again for hopping on Benzinga Live with us today. Enjoy the rest of your Tuesday. Happy Halloween. We'll see you next week.
Always a pleasure, Aaron. Have a good Halloween evening.
Appreciate it. All right, guys, that was Ryan Pannell from Kaiju. I'm going to go ahead and drop the links in the description if you want to check out more from Kaiju. Of course, talked a lot about brokerages today. If you guys have any more questions on brokerages, feel free to drop them in the chat. We're going to be live for the next 5 minutes. Just do some quick market recap before we wrap up for the day. Look, the market was green earlier, and then it was red. I honestly don't know what it's doing right now since I've gone live on the show with Ryan. So I'm just gonna guess. I'm gonna say the SPY's up. We'll go with SPY's up in between 1 and 0.2% right now. I'm gonna say up 0.15% right now. Oh my God. I'm pulling up my Benzinga Pro. I was wrong. I should have known I was going to be wrong. Well, actually, okay, realistically though, hold on. I'm going to spin zone this real quick. Because while I did say that I thought the S&P 500 would be up by about 1/10, 0.2%, split it in the middle, 0.15. It is down. Oh, that's Apple. Silly me. It is actually completely even. Okay, now it's actually coming. Oh, look at this. All right, we're getting here. I'm only 0.1% off now. That actually wasn't a bad guess. It could have been way worse. Now we're at 0.1. If it gets to 0.15, then my guess comes true. Okay, now we're going the other way. All right, but either way, pretty flat day on the S&P 500. Check out the Qs. Looks like tech's getting a little bit beat today. XLE. Energy having a decent day. Well, pretty flat. XLF having a decent day for financials. I mean, there's been a lot of concerns about bank deposits and are we going to see another, chaos in the banking industry after what we saw in March with Silicon Valley Bank and First Republic and all these things. I am not as, and I think last week when my boy Jamie over there at JP sold some shares, it started making people think like, okay, what's going on in the banking industry? This isn't good. But I don't necessarily. Oh, okay, this isn't a good. This is what usually happens, guys, when you use Benzinga Pro. So I think I might be having like a cache issue or something. I might have to do something about this. But anyway, my point with JP Morgan. So, okay, if we go back. Oh, wait, hold on. I'm getting some questions in the chat. Sydney Osborne wants to know, AB needs a brown leather jacket and a Porsche. Look, Sydney, I don't know why you're saying that. I don't get it. But I don't disagree with you. I do not disagree with you in the slightest. I'll just have to. I think my insurance might go up if I get that car. Because I think it's fast, right? I think young men like myself, when they drive a fast car, the insurance companies jack it up on you. I think. I'm not a car insurance expert, but I think that's what happens. Back to JP Morgan. Just real quick. I mean, if you guys like recap what happened in March with the bank stocks, is basically as interest rates rose, all these growth stocks needed to pull out money from their banks. They were all banking with Silicon Valley Bank. Silicon Valley Bank collapsed because of this essentially bank run. And it made people worry that it was going to go all the way across the banking industry and hit all the different banking stocks. Well, because Silicon Valley Bank's customer base is a lot different than what JP Morgan's or whoever, they're going to be, worse off than other banks. So I was never really, I mean, we had Tim Melvin on and he was talking about, look, like hand up. He was definitely wrong about some of these stocks. He said he liked First Republic Bank at the time. He said he liked Western Alliance at the time. Which, hold on, we might be up on Western Alliance if you bought during that time in March. Yeah, I mean, if you bought right on that initial dip in Western Alliance, you're up more than 50% right now. And not to mention that these stocks pay a pretty good dividend. So you're actually up more than 50%. And if you go back and watch those streams that I did with Tim Melvin right in this aftermath, he was saying Western Alliance, great stock, great company. Their book is fine. Their balance sheet's good. They're being basically like unfairly grouped in with all these other banks. Now, a couple of other regional banks, you look at Cole & Frost Bankers, ticker CFR. That one's actually down 40% this year and has not recovered from that drop in March. So I'm not saying we're out of the woods with these bank stocks yet, but I always just like to look at what the market's doing. And if everyone on Twitter is saying, oh my God, the market's going to crash, the market's going to crash or the bank stocks are going to crash, whatever, then you go and look at the stocks and they're moving higher. I'm always like, okay, well, it doesn't seem like the market's as worried as you are. So, Tree. Oh, dollar. What's going on? Oh, Lending Tree. I don't know what's going on right now. I got to fix my computer. I'm sorry, y'all. 18% today. Damn, son. But yeah, Jay Rice, I think your point was Lending Tree right now. If you just, I actually, okay, I will say this. I really like just looking at stocks on Google because it's easy. You can just Google like the stock and see some of the different things and you can get more and more. If you go to the 5-year chart on Google here on Lending Tree, the stock is down more than 95%. That's all I need to know. That's all I need to know. Don't want anything to do with it. You could sing for the who. You've clearly never heard me sing. That is one thing I'm willing to admit. I am just piss poor at. Um, and I've always thought that singing was one of those things that you could either just do or you can't. Like you can either carry a tune, match a pitch. Is that what you want to? Is that a thing? I don't know. Or you can't. But I saw a video the other day of Ed Sheeran singing when he was like 16 and he was god awful. And apparently a lot of people do just work at it and get better at singing. I don't think I need to. I don't think I'm ever going to take the time to do that, but I wish I could. I wish I could just like belt out, do karaoke and not embarrass myself. But it is what it is. I mean, we're all good at different things. It's like the Mark Twain quote: "We're all geniuses, but if you judged a fish by its ability to climb a tree, you'd think it's pretty stupid. If you've judged me by my ability to sing, you'd think I was very, very wildly incompetent." Which I may be, but not as incompetent in other areas. Um, yeah, I do. I mean, Jay. I mean, speaking of some beaten down names, okay, should we look at other beaten down names? I mean, like shit. I'm just thinking of like high growth stocks that have gotten freaking crushed recently. Let's look at Asana. All right, yeah, up 2%. I mean, look at this stock. Ugly, ugly, ugly. From November, $141 to 18, down 86%. Upstart stock. Yeah, Upstart baby getting a little. I actually really like Upstart, and unfortunately, like I think it's kind of like a win-win stock right now because I think either like interest rates stop rising and these growth stocks come back in favor, and Upstart will probably be a $50 stock again before you know it, or we start heading more and more toward a recession, in which case people will need money. They're going to need to pay off their shit. So they're going to start getting loans from Upstart. So I would be a buyer of this stock. Caveat, I have not done a like whole lot of due diligence on this stock. I just like with everything I know about it, if you put a gun to my head and told me buy or sell, I'd say buy. That was really dramatic. I shouldn't have said that. I don't know why I did, but you get the point. What are other beaten down names? Upstart. Oh, how about this? Has got to be like one of the biggest, the most beaten down ones. Look at this one, Affirm from 162. Actually, I guess that's about the same as Asana. Yeah. ESOE. This is one my buddy's in pretty heavy. He swears by it. Yeah, EOS Energies. I think it was a SPAC. Yeah, judging based on its $10 share price before it started trading. And I mean, if you look at it, I mean, this stock is beaten down. $168, $225 million market cap. This is one for me that it's like, all right, like if I buy a couple hundred shares, right, I could buy 300 shares for like less than $600 and like hope it's just a $15 stock one day. And if it's not, oh well, it was 300. It's like I'm not gonna invest in this one. I'm just trying to think of other beaten down names off the top of my head now. Is Tesla still getting beaten down? No, Tesla's up today, but I mean, look at this. This is ugly for Tesla. You look at the year to date, you go back to its highs on July 18th, down more than 30%. I mean, this was okay. So to put this into perspective, in the last month alone, look at this. Tuesday, October 10th. So what was that? That was exactly 3 weeks ago today. The stock was 263. It's below 200 right now. Elon Musk in the last 3 weeks has lost more than $25 billion. Unrealized. Okay, because I know someone's going to correct me on that and say Elon didn't really lose that much money. It's unrealized. Okay, unrealized, he's lost $25 billion. That is more than the entire market cap of eBay, more than the entire market cap of Zoom, more than the entire market cap of Delta Airlines. Not combined, but just individually. I think Delta's like a $20 billion company, and Elon has lost $25 billion in the last month. That's just crazy that you can lose. I mean, think about it. He's lost $27 billion in the month. He could have just given one of them to me. He gave me $1 billion. What's the difference to him? He was out 27 already. Oh shoot, guys! I didn't realize it was already afternoon. Watch the smoke tuna climb. Okay, I don't know what that means. I don't know if that's something I can Google at work or not, but try. Took a small bet on dumb money tweet on Crocs because a few. Or when you say dumb money tweet, are you talking about the actual like dumb money show? Isn't that Chris Camillo's show? Peloton, how can you lose? I mean, this stock is disgusting. I don't even want any. I don't even want anything to do with this. I mean, look. Here's the thing: is I mean, like, Peloton's beaten down, sure, but it's still valued at nearly $2 billion. Do I really think this stationary bike company is worth $2 billion? No. My whole point or my whole thesis on Peloton was always, why would someone pay? I don't even know how much it is, honestly, for a Peloton, but why would someone say pay $50, $60, $70 a month for a stationary bike when they can spend that money on a gym membership and have a stationary bike, but also a treadmill and weights and showers and sauna? Like, you just, like, for the same price, you just get so much more. AB in the streets this winter. Sure. You got to buy me a new coat, Jesse. Oh, people have been loving the new tote bag. I think actually the like Lulu's over the strap bag has been like one of its big drivers over the past like year and a half. Which, by the way, I mean, I'm sure it's mostly dudes watching this, but if you guys can like figure out the fashion trends and what's hot and what's not, like, you can make some money in the stock market like that. Kids have been talking about Abercrombie coming back for 2 years. It's like common knowledge that Abercrombie's cool again. And yet investors on Wall Street didn't know. I mean, look at this. Making new all-time highs. Stock's up more than 283% from its lows September 2022. And again, this was something that it's not like a secret. Like, if you talk to any young person, like in between the ages of like 18 and I don't know, 25, and we're like, hey, like, Abercrombie, and they're like, yeah, it used to be cool. It's actually coming back a little bit. They're coming out with cool shit again. I actually have really cool shit from Abercrombie that I got recently. So again, I mean, like, people always want to find the next Apple, the next tech stock, what's going on with Bitcoin, etc. But sometimes just knowing like what's hot and what's not, it's all you need. Cellular, or how can I say that? What is it called? Celsius. Celsius, the energy drink. Yeah, exactly. Exactly. If you were watching, like, if you've seen how many influencers on TikTok and stuff were posting about Celsius like a year ago and buying it then, like, yeah. All right, y'all. 12:05 p.m. Eastern. Gonna go ahead and spin you guys loose. Get out on the streets. Get out on the market. Happy Halloween. Pass out some candy tonight. Hope y'all's costumes worked out. We'll be back on Thursday. Let me double check. We better be back on Thursday. Oh, shoot. We're back on Thursday. Hold on. I gotta check what time my flight is real quick. I'm flying out on Thursday. I just realized looking at my schedule. I've actually been thinking about, like, maybe I should just make that my niche. My niche is the like fashion clothes, because not a lot of other people are doing that. Okay, flights. Okay. Yeah. Yeah, we can do it. We'll do a show. We'll be back on Thursday. All right, y'all. Peace and love, y'all. Till Thursday.